failed breakouts in quite a few instruments. But let's take it one thing at a time. Um, 10-year US yield is always where I start. And have we seen a top? The CPI number yesterday was worse than expected, only marginally. And we've been talking about this for a while, that the market's very one way. Every analyst you look at or listen to, they're all saying higher yields for longer, and inflation is going to be sticky and higher for longer. I will tend to disagree, and I think I was looking at Jim Welch's, who I really like, his latest interview on Trader Summit, and he was saying that he expects inflation to tick down. But let's see what we get today with retail sales. But the main thing is that I think risk reward now for bonds is to be to
On the
rally,
long
so
side.
yield,
Yeah.
yeah, so for yield to go lower. Let's see what happens when Trump takes power, because he has said for a while that he thinks yields are too high and that the dollar is too strong, and markets tend to forget this. Um, so one step at a time. We're talking about bonds. One I really want to show is the 10-year gilt, which has been going, uh,
Yeah.
yields have been rising very sharply, but now back to this little zone, which is very important. If this breaks lower, then this would have been a very big, well, very big. It would have been a failed breakout, which uh, would suggest that we edge towards probably this, 38.2 or even the
Yeah.
50% retracement. Data from the UK was not good yesterday, so
I think it's very smart to watch the gilts because, I was taught that the UK led in financial markets. I would pay attention to the FTSE when I was trading the Dow. And this looks like
That
it
was back
led.
in the day. That was the back in the George Soros days, though.
Yeah.
yeah,
Yeah,
Well,
I
you
mean it
know what?
was.
I think Solomon said there's nothing new under the sun. So we may think there is, but well, AI is new under the sun. So I guess Solomon was wrong,
yeah,
but he had a lot of money to be wrong with. So
that always
and
helps.
and women, he had many concubines. So he probably
Yeah.
died broke. Anyway, go
So,
ahead, bro.
continuing on with a few more things, the S&P and equities in general, I've said for a while, I think we're still on an uptrend.
Yeah,
No technical evidence for the opposite. We really have to go below 56.75 for me to say, okay, this is it for a top. And yes, the way I look at things, when things turn, I usually miss the first part of the move, but I really do want confirmation. Um, so for now, I don't think anything has changed. Once again, if you put a gun to my head, I will buy stocks, which makes no sense in terms of valuation, but this is what I would do. Um, what else? Let's have a look at the metals. We have to look at the metals. This is probably not needed anymore. Gold, very resilient. I mean, any way you look at it, even during the time 22, 23, during the big rate hikes, uh, still went sideways. Again, dollar strengthening, yields going higher, again going sideways, which is mighty strong in my opinion. So I do think that these highs are going to get tested and broken. I think it's economics and mathematics 101. Silver is less so, less convincing, but it is trying. A gold silver ratio is still between 80 and 90, and that is, it's it's not a good thing for silver. If you're a silver bull, you need to see this go back to the low to mid 70s. But for now, metals are still doing okay, especially gold. One thing I want to show is some other things like copper. So copper is broken out from this trend line. Okay, there's only 2 points, so it's not a major one, but it still seems to be breaking out. And
you're
so
going to
we need
show
to. Sorry?
platinum and palladium look better. I know you got in platinum very well, so we're having a little pullback here. You
Yeah, I only
surprise
got in
us?
at 920, so I'm not that far from where we are now. And silver 29.75, that's looking better. But we had this false breakdown, sorry, and then
Yeah,
I got in straight away. It still needs to play out. It will depend on yields and the dollar 100%. but I think overall commodities um, might be looking good. Especially copper looks good. Corn, I was looking at today.
Yeah.
Quite a nice area that we are trying to break out of. Just a few things I look at. Then again, if you look at something a bit more general in terms of commodities, so DBC, which is the big ETF right in the middle of no man's land, DBA, which is the agriculture
Looks
ETF.
like it was a bottom though.
Um, well, what do you
Maybe.
mean down here?
Yeah.
Yeah, but now we're right back in the middle of the range,
Yeah.
and it's just going and going, going all the time. So there's not clear direction for me in commodities, but I'm definitely looking at them, and I think that if what I think manifests, which is a lower dollar and lower yields, then commodities have a very good chance of catching up with equities because equities have been outperforming pretty much everything. Um, yeah, that's more or less what I wanted to look at. Euro dollar is, everybody hates the euro dollar. I think we're getting to levels where risk rewards looks good for dollar shorts, but I wouldn't rush into it just yet. When is Trump's inauguration? Is it next week?
Monday.
Monday, yeah. Well, let's see. But we do have more important data today. We have retail sales and see what happens with inflation and employment going forward.
So
That's pretty much it what I had. So I will pass it to whoever wants to take it over.
how do we
Well,
know
well,
that
well.
wasn't AI talking instead of Stelios? Because I just saw that some AI pulled off a scam uh, as Brad Pitt
Oh
and
yeah.
stole a lot of money. Anyway, I'm not. How do we prove that we're not holograms to the people here? Anyway, sorry, Blake. Go ahead, Blake.
No, no, it's all good. No one was taking the screen, so I was just going to grab it. I know we want to talk with Ryan and K-Man this
yeah,
morning,
right.
and
Yeah,
let's bring him in. And by the way, good morning, everybody.
we,
Stelios, good to hear your voice, and good to see you.
we
Just
don't know if it's him, Blake.
We don't. It could be AI Stelios. There's a couple of things that I wanted to mention just before we bring in we'll bring in Ryan here. Today we do have Scott Bessent's confirmation. It is at 10:30 a.m. Eastern. So that's what that is what is supposed to be happening today. And then and the other thing I was going to mention, and we talked about this in the chat room. If you guys, there's some conversations we've had in the chat room, and I'm going to just talk about one thing here. You can see we've had some kind of deeper discussions this morning. I interviewed Mark Chandler yesterday from Bannockburn, and that interview should be out a little bit later. For those of you that don't know Mark has been, I mean, he's been in the industry for 30, 40 years or whatever. He's been on Bloomberg and CNBC. He was like a staple of ours to watch 20 years ago. Every morning in New York, he would always be on TV. And he's one of the more knowledgeable FX guys. And his firm basically helps other companies, do currency transactions globally and helps them position themselves and whatnot. But he several years ago he wanted to join or thought about going into politics and being in part of the FOMC and becoming a Fed chair or Fed governor, excuse me, like a regional governor. That was like one of his aspirations. But I want to say about 5, 7 years ago, even though we were doing interviews at that time, he was traveling a lot back and forth to Washington. Anyway, he knows a lot of people in Washington, and we were having this discussion with the interview. I'm not going to take away the whole interview because we talk about China, Trump, and the UK economy. So make sure you guys listen to that whenever it's out this morning. But he was mentioning yesterday that his contacts believe they have told him in Washington, Trump has executive orders of about 100 executive orders that are being implemented on day one. So that's the conversation we were having here and talking about, the risks that are going to be associated with next week. When you're talking about Monday, Obviously, the market's closed for the holiday, but as K-Man and Ryan were talking about on the Flow Show, the trading desks are going to be staffed. I'm assuming. It may be a holiday, but it's Trump's inauguration, and there's going to be a lot of people, around waiting for what's to come within, I would say, 24 hours of the inauguration. And those sweeping executive orders probably have tariffs in them. That would be my assumption. And so we have to be really ready to go come Monday.
This is
next week.
bigger than a Fed meeting, isn't it?
Oh, 100 times bigger. My assumption is based on what happens, we will see, two big figure plus moves in currencies right out of the gate based on different expectations, whether it's a 10% blanket, tariff across the board, or certain economies are getting hit differently based on, economics of it all. And if it's less or more, who knows? But I believe we're going to see big figure moves within 24 hours of his inauguration. Anyway, I just wanted to mention that because I think you guys, we all need to be prepared. I plan on having $0 exposure ahead of this. I'm trading a couple of cross rates, and that's what I'm going to stick to. And I've been planning that all week. We've been talking about it on our shows, on our private Forex Analytix shows this week, because I think the risks are high, and they're high in both direction. I don't think there's any good. I mean, you guys can make your assumptions on what you think is going to happen, but one thing I learned 4 years of dealing with President Trump and trading through his first term is we don't know, and it's all at risk. So anyway, I just wanted to mention that before we bring in Ryan. Ryan, what are your thoughts about what's been happening overnight? We got some UK GDP data that came out, and from what I see, it came in a little worse than expected. Correct?
Yeah, but it wasn't a huge disaster, which I think would have moved the market. So yeah, we're still posting 0.1s, 0.0s, 0. Whatevers for GDP, flat 3-month rolling number. So nothing to write home about. It's November data, so it probably hasn't reflected anything from the budget. But as I say, that wouldn't have mattered if it came out a bad number. The market would have jumped on it. So yeah. No real bad news or more bad news for the UK, hence why the pound hasn't fallen right out of bed.
Sterling really hit our key level yesterday, which was 123, basically 122.80, 123, which happened to be this previous support. And that's kind of like, for me, my new line in the sand for sterling, because in order for it to rally, and I'm just, speaking technicals right now, in order for it to rally and people go, oh, wow, we maybe we got a double bottom or it's holding support, we really have to get above previous support, which is acting as current resistance. So unless we get above 123, I'm not super excited about sterling prospects to the long side. I mean, that bounce has been pretty shallow thus far. Don't you agree?
Yeah, pretty much. Your 120, your new 123 is my old 123. That's been a level. It was on the level on the way down, and it's been the main level on the way up. But it's still, and I was making this point on the Flow Show, it's still all small moves. 150 pips and 200 pips off the lows. After it's just fallen 1,300 pips is nothing. So yeah, what's not encouraging is that we got the bounce. We hit sort of 122, 40, 50, couldn't get above there off of 121. Then yesterday we had that spike through it, but didn't last, and we came right back down to it again underneath 122, 40, 50. So yeah, it's in a bit of a coin toss here. Coin toss. Sort of between this 122 and 122.50 at the moment. And if it's moving and holding under 122, we're probably going to have a look down at the lows again.
All right. Well, sterling still a little weak, and so is euro. And Dale, I heard you say that you were looking at the US dollar Norwegian krona as 2 drives higher. One of the things that we've been focused on with the US dollar Norwegian krona specifically, and this is with all dollar pairs, guys. It's not just it's literally every pair. If you look at the channels that are being formed. Yeah. Yeah, US dollar Norwegian krona, you can see is I mean, we pivoted off of that support perfectly, the 1120 level. I know when Stelios gets his opportunity to buy Norwegian krona, he's going to buy it with both hands. My assumption would be it has to be, somewhere below 1120.
Yep.
It would open up a, false breakout. We're going to get a, big reversal. I know you're always a Norway bull, but I have to admit it hasn't acted really great with the dollar strength that we've seen. And I'm not saying that it can't explode higher. I expected us closer to 12 already, but it really is struggling up here.
You think we could still get new highs in Looney, Blake? I know you
No,
want to sell it higher.
Yesterday we hit the channel support. I tweeted about it yesterday that we were there.
Yeah.
I'm hoping we do. I really, really hope we can reach above, maybe there's, some when all the tariff news comes out and people realize that Trump's going right after Canada and he really wants to take over Canada and make them our 51st state, which, is preposterous if you guys think about it. And if you're Canadian, I'm just throwing that out there because it's been said. But
what's your 1.618 up there, Blake?
It's 145. Well, basically 146, 145.80, 145. This would be of the entire move. No, it's right here. It's 145.80. If you take the entire range, I was just looking at the last move lower, but no, just because I was looking for a retracement. But really, I would take this entire range here, which will put us at 145.84, basically 146. Yeah. I'm waiting for a move to 146. You can see I have an alarm set up there. I'm just like, please reach for it. I'm willing to short it up there.
I think you're gonna get it, man.
We might. I mean, like I said, these are all. It's all about tariffs at this point. It's not. There's no if and or buts about that. Are we going to get what the market expects? Are we going to get more or less? And that's going to be the driver of all these currencies, no matter what. But you can see that we have just channel after channel after Aussie reversed from the channel after the jobs data last night. Channel.
More low there too. Maybe.
Channel. I mean, it's nonstop. Every dollar pair, you name it. It's been that way for like literally the last 2 weeks or more. And so our risk is all very defined in these channels, and we break them. And it's probably they're probably, if they break going the other direction, it's for a reason. It's probably because the tariffs weren't as bad as the market expected. They're not going to draw as much dollar demand, and we'll see a reversal. But until we see all these channels reverse, you have to assume that everybody's prepping for what's to come here in the next couple of days. Anyway, I want to bring in K-Man really quick. See, because we had some moves in the yen overnight.
Good morning.
Good morning, K-Man. So the dollar yen actually pushed below 156. Markets prepping for a BOJ move. What's going on here?
Some more hints and articles saying that Bank of Japan may move after all, but it's more than that. I also think the market is already thinking that Trump, if he slaps tariffs on the rest, is not going to be as harsh with Japan. And that has helped as well. The dollar yen or all yen pairs come down, and now it's probably over to the orange hurricane come next week. Well, as I was saying yesterday and all the shows, he should in theory be less hard against Japan because he needs them. Being the biggest investors in the US, manufacturers in the US, buying whatever bonds still for now. So that I think is helping the yen to strengthen a bit. But yeah, he's driving. He's in the driver's seat. And then if that materializes, we're just looking at stuff on the flow show. So you got the 155, but then below there, you have this again eternal showing up of the 152 on the white, assuming that we don't get anything harsh from Trump against Japan. This could actually go as low as there.
Can we
But
talk
then
about
it's
that for
back
just
over.
a,
But then it's back
can I
over to.
can I ask you a question really quick as far as that goes, as far as tariffs go? You know, Japan is seen as as a really, really strong ally to the US. My assumption would be that Japan is going to steer clear of many, many tariffs in my opinion. I
Yeah,
mean,
and that's what
do
we are
you share
trading
that
right
same
now. That's
view?
what I said.
Oh,
That's what I
okay.
said.
All right.
That's what we are trading right now. And then once he's done being nice to Japan, then he's going to be over to the BOJ, because now the market is also partially trading the hike, BOJ hike next week. Imagine that BOJ once again, as in December, does not deliver. Then it's probably we're going to see the yen getting a slap again. But for the time being, I wouldn't be short yen. And I mean yen, the currency, right? I know you guys, when you say yen, you mean dollar yen, but
Yeah, you're
yen
not
is
long
yen.
dollar yen or
No,
not
I
long.
don't. And you just have to look at how it plays out right now. We've got those couple of articles saying that Trump is ready with 100+ executive orders, and the dollar strengthened again, but the dollar yen is still well below where it broke yesterday, around 156.70.
Yeah. Okay. Well, you know, the one thing we've got to deal with in a few minutes is going to be U.S. retail sales, and that's obviously before the Besant, confirmation hearing. And many of you guys will might be surprised to hear this. You know, he is the first, if confirmed, he'll be the first LBGQTI person. I didn't know that. Actually, that was new news to me. I think I actually read that at some point, but I'm like, wow, times have changed. Anyway, some just some probably useless knowledge. I see Steve is here. Steve, good morning.
Steve would like
Good
to have
morning, mate.
dinner with.
Good
Would
morning,
you like
guys.
to have dinner with Basant, Steve?
Okay, so Steve, what's on your radar right now? I know you pay pretty close attention to precious metals and gold.
Nothing has changed since yesterday. So let me reiterate. We talked about how the dollar came down yesterday to backtest the broken channel trendline support. Guess what? It held.
Yeah.
Right. And since that's what happened, the path of least resistance remains lower for equities, although they've rebounded, but most importantly, higher for the dollar against practically everything. Why am I saying lower for equities? Equities haven't broken down, haven't broken higher yet, despite the rebound. So I'm not convinced by the move we've seen. I think this might end up being some kind of a market trap here.
Yeah. Maybe it lasts until after inauguration.
Yeah, market trap, like everybody's getting short.
The coast is clear. We're going to new highs. There's plenty of that out there now. That the low that we saw, that little reversal day, that's going to be the launch pad for a melt up.
Yeah, and I mean, with the inauguration on Monday, that's got to be the overarching theme right now. And by the way, I don't know if you guys have seen all these bank earnings that have come out. I mean, really, really good, earnings for thus far. I mean, I know we're just kicking off earnings season, but the banks look good. All right, guys, I'm going to get ready for the data. And Steve, you were very correct as far as the dollar index. It's holding really critical support for now, and I'm assuming it's going to hold even. Now, the market's going to assume that there's going to be good retail sales. That's going to be the assumption. I mean, it's hard to bet against the U.S. consumer, especially if you're looking at December data. But at the same time, I would assume that even on bad data, the dollar gets nowhere near channel support today. Could be something that Besant says because he's going to be quizzed a lot or questioned a lot about tariffs today. So that's something we need to be paying attention to. But all in all, I think that dollar low is going to hold going into the confirmation or into inauguration on Monday. So anyway, over here we have the dollar index right in the middle. We have the S&P over here to the right. We have 10-year yields over here to the left. Any comments from Ryan, K-Man, Dale, Steve, before Stelios, before we get this data? Anybody?
Yeah, I still think Canada's going to get to your sell zone. I don't think the yen is going to make a new high. It's much weaker than the dollar. US dollar yen I'm talking about. So NOK I think is going to make a run for new highs for 3.
All right. Well, here we go with the data. It'll be out in approximately 3 seconds. Here we go. Heads up.
Bit softer, but up.
Look at Philly. Look at Philly Fed. Is that the real number? 44.
Wow. Is right.
New orders is the big outlier. Wow, interesting.
Well, yields have come off. They're a little softening a little bit. Stock market's a little weaker. The dollar.
The control group is higher though. The control group came in much higher. That's the core sales number. So strip out all your bits and bobs. It's a good number.
Here comes the dollar back too. Yeah.
Yeah, I mean the dollar, the dollar barely.
King dollar.
Yeah, I mean dollar got hit initially, but I mean yields are still a little softer. Stocks are, bleh. Well, you know what? I believe that today's move is more about Besant, frankly, and remember we're probably going to see a lot of position squaring between today and tomorrow. Remember, guys, inauguration, like I said, we're probably going to get some sweeping, executive orders come day one, and that is going to be the market mover. And I expect big figure moves Monday, Tuesday. So I'm hoping as a trader we get it, and I hope that if you do have positions, you're on the right side. For a lot of us, I know myself included, I'll be sitting here waiting. One thing I want to mention before you bring in Jim, Dale, is this is going to be the last weekend of us having our sales for Forex Analytix. We offer our discounts through the holidays and usually through the first couple of weeks of January because we know so many people are away from the office. So 40% off semi-annual subscriptions. We've never offered that before. So take advantage of it. And with that being said, Dale, I'm going to pass it over to you. Thanks, guys, for everybody for being here. I'll talk to you soon.
All right. Thank you, team. I believe
Thank you, everybody.
In every drop of rain that falls, a flower grows. Isn't that beautiful? That's what I believe.
I love your voice, Dale.
That's what I believe, that every raindrop turns into a flower. I'm a flower child. How about you, Jim? Were you?
You're
Jim
bringing
Carroll?
tears to my eyes. You're bringing tears to my eyes, Dale.
Well, that way you won't be able to see your PowerPoint when you present it. Anyway, Jim Carroll, Vixologist, very good call with your newly developed Vixometer for risk off a week or so ago. Nice.
Thank you, Dale. I'll talk a little bit about that new development.
Okay.
I'll just share the screen here. But what I wanted to do was, okay, have you got me?
Yep. Yeah, got you.
Walk through my 2024 year-end review, which will include, some VIX mix information.
Okay.
And so for those of you who don't know who I am, Jim Carroll, I'm a wealth advisor and portfolio manager at Ballast Rock Private Wealth Boutique private wealth firm. Scott Besant is actually a Charlestonian. He's not a neighbor. And in fact, I hear he's selling an extremely beautiful house on his way to Washington. But he's a local.
Okay. You have
So,
confidence in the guy? You know about his.
He's incredibly smart. You know, got a world of experience working with Soros and Druckenmiller. I mean, you couldn't
Right.
have a better pedigree.
Okay.
And you know, we'll find out. You know,
Yeah.
we'll find out. He's signed up with the Trump 2.0, and
Yeah. We'll see how that goes.
we'll see how that goes.
Yeah, I hope there's the wisdom to listen to the guy with the new administration. If you
Right.
appoint him, listen to him. That's not a ringing endorsement? Okay. All right. Anyway, Jim, go ahead and I just want to bring it up that the VIX is very complex, and you really have to dig into the details if you want to learn about it. I can't think of a better source for learning about all the intricacies of the VIX and how it gives market tells. Jim would be, pay attention to his work. So, okay, more heart attacks ahead. Okay. All right. Everyone take their low dose aspirin before we watch this. Go ahead, buddy.
So, you know, 2024 highlights. 2023 was dubbed the year of no fear in equity markets and volatility. You know, it was basically rally ho. You know, we had the little dip in that finished in October, but the year overall was, you know, pretty
Yeah.
strong. And the first half of 2024 was pretty calm. I mean, we had a little pullback in April, but you know, nothing shocking. Back half of the year, and we experienced two what I have dubbed heart attacks, one in August and one in December. Santa Claus rally failed to materialize, and we introduced what I call the VIX mix as a composite indicator of market conditions through the lens of volatility. And a little bit more.
Cool.
This is more of an overview of 2024 as opposed to a deep dive into VIX mix, but you know, there'll be more to come.
Okay.
So you know, what we saw, the blue on the right side of the screen shows you the two heart attacks in 2024, and the first half of the year relatively calm. And this is a look at this thing called the VIX mix. You can find it vixology.substack.com. And really what I'm doing is taking, you know, a dozen plus individual components or individual indicators and putting them together in a composite that tries to give a sense of where we are on a spectrum from, you know, we're all going to die to everything's coming up roses, bullish to bearish, bearish to bullish. And this particular chart maps daily values for the VIX mix against the S&P 500. And we'll get into a couple of little case studies as we go along. You know, what's interesting here is, and I saw this even before I got this thing up and running. You know, the beginning of 2024, the S&P, you know, was rallying quite clearly, but you know, it was like people didn't fully believe in the rally, and you know, that's reflected in the fact that this composite indicator was yellow most of that time. We were in the neutral zone for most of that time. And interestingly, before the pullback in April, you know, we got green. You know, funny thing, you know, you get to a top and everybody's bullish, and then all of a sudden stuff changes. And so, you know, this is just kind of an overview that lines up what the S&P was doing with what the VIX mix was telling us about market conditions. And it is really a condition indicator. It's not really
a trigger.
It's not a trigger. It's not a, you know, a trade signal per se.
Right.
But we'll get into a little bit more of that.
Okay.
You know, again, this is kind of cleaning up the charts and showing that the two spikes, that what I call heart attacks, Number one was in August. We all remember. We can blame it on the yen carry trade or the dispersion trade or a crypto fund getting hit with a margin call. What we know is that we had this crazy move from 12 to 66
Yeah,
in a month.
I remember it.
And what was even then crazier was the speed with which we recovered. I sort of arbitrarily measure from below 15 to the peak and back below 15. And, that happened in 18 trading days.
That's
it
never
was
happened before. Yeah,
no,
unprecedented.
Yeah. It's almost like it didn't happen, right?
Well, it didn't because they were, the option guys in VIX options were not trading them. They pulled their horns back.
Yeah.
They
That's
got
a
bailed
whole.
out by that rapid decline, because the funds, and that was one of the reasons that I was long VIX calls, was because they have ETFs that
Right.
take advantage of being short vol, and
Yep.
I thought that was crowded. All right, and obviously it was for that to happen for an hour.
Yes.
But for it to come back down kind of smacks of manipulation to me.
Well, I think what's clear is because we got to 65
Yeah,
outside of regular market hours.
right.
And so, there's no question that, the ability to actually get in there and trade anything was
Yeah,
extremely limited. And the
yeah,
VIX, obviously, everybody at this point knows that you can't trade the VIX itself. It is derived from the prices of
right.
S&P calls and puts. And the reality is that, in the early hours of August 5th, the spreads on those puts and calls for the S&P were way out there,
Yeah,
and just,
yeah,
you know,
yeah.
the VIX,
Chaotic.
the VIX calculation, once the market opened, came back down to earth pretty rapidly. But
Plunge protection team, man. They came in and sold vol.
yeah,
Anyway,
but it was remarkable.
or the
And
market was dysfunctional for a day.
it was clearly dysfunctional. So,
Okay.
so this is that period of time through the lens of the VIX mix, and just to give some sense of, how it can be helpful to people. And it obviously depends on, what kind of trader you are, what kind of investor you are. It probably has a little more value for people who are active in the markets rather than people who, are trying to hold on to a portfolio, for a long period of time. Although I think even for those people, understanding how the conditions might be changing, just so you can kind of have the right mindset. Say, okay, we might have a little market pullback here. I'm not going to worry about it. I've got my stuff in place and everything's going to be okay. But at least that way you kind of, you might have a little bit of a heads up. So, as we went into the end of July, we had quite a bit of green showing, bullish conditions. Again, sort of the first sign of danger was, the S&P peaked on the 16th, and VIX mix had already turned from bullish to neutral. Does that
Nice.
mean anything automatically? No, it doesn't mean anything automatically. But, in technical parlance, it's what's called a divergence, right? We would expect conditions to be bullish when the S&P is making a new high, and this said, yeah, maybe not quite so bullish. It turned bearish pretty quickly. And what was interesting was, at the end of the month going into August, we had a little couple point rally over several days in the S&P.
Yeah.
And the VIX mix said, yeah, that's fine, but we're not changing our tune. We're remaining bearish. And so, you could say that little move in the S&P was a head fake. But if you wanted to hold on to a bearish position, you had a reason to do so.
Okay.
So now
Right.
let's go to heart attack number 2, the Fed meeting. This is a little bit of a different color. We had pre-election volatility buildup. which was anticipated. Who knows what's going to happen in the election? Is Biden gonna? It's Biden. Is Harris going to pull it out of the fire? Will the how's Congress going to settle out? There was a significant exhale from a volatility perspective once the election was over. Then we get into December, and we have this second heart attack around the Fed announcement. Once again, the EKG returned to normal extremely quickly. From 15 to 28 back to 15 in 7 days. Right? It's just nuts.
Kind of an echo of the last
yes
scenario, or is it even crazier?
Well, in some ways it's even crazier, but it didn't travel quite as far, so maybe it was easier for it to get back down in fewer days.
Yeah.
But this is indicative to me. These two events are indicative to me of kind of the responsiveness in the volatility world to events, to things, to triggers. And by the way, you never know how fast or how far. And apparently, you never know how fast or how far in either direction. So, this one was, much more challenging. There was certainly a lot less evidence. Again, through looking at the VIX mix against the SPY, you can see how there was a buildup of, volatility expectations going into the election.
Yeah.
And then election day, we got into rally home mode. And then going into going into Fed day, again, you had kind of a little bit of topping action in the S&P, bullish conditions, turned to neutral the Monday of that Fed week, so Monday, Tuesday, Wednesday. But, I'm not going to tell you that I knew that the reaction to the Fed was going to be like this. I think it was a very binary event. And frankly, I was a bit surprised at the violent reaction to, what came out. But, that will happen. And so, this was one of those things that, it happened. It was more violent than anybody reasonably could have expected. Were there signs ahead of time? Yeah, maybe, but not really.
Yeah. Well, it wasn't green anyway. It was yellow.
Exactly. It was not green. It was yellow, which
you would expect. Would have been a bad signal.
Yes. And again, Fed meetings tend to be a time when you've got a little bit of a buildup of hedging. So, I would never be surprised to see VIX mix go neutral in advance of a Fed meeting, just indicating that people are, bearing themselves up in case something bad happens. And, that's what happened here. If you had bared up and made some bets that bad things were going to happen, it worked out great for you.
I saw Mike Ho on CNBC, and the question was asked, where are people buying options? And he said that people are prepping for volatility on January 31st. That there's something about that time frame that people were hedging pretty good for that date.
Interesting.
Do you know anything about that?
No, that's the first I've heard January 31st. We've obviously got, January OPEX coming up. And,
well, we have the debt ceiling limit by then.
Debt ceiling,
I think
the
it's the 31st. Well, the debt ceiling's a bigger deal than the having a party.
The debt ceiling, could be a bigger deal. Frankly, Huge. I'd be surprised if the incoming administration is going to let that be a problem, but we'll find out.
Well, they're sure trying to package a lot of things with it. Usually it's tough enough to just legislate raising the debt ceiling, let alone all of the programs in there with raising the debt ceiling.
Right.
Anyway, just something I've been thinking about.
That's a good one.
All right, buddy. So
okay, so going back to sort of the overview, 2024 if you look all the way on the right, what we see is the red dot says the average level for VIX actually declined year over year, but the range expanded. So in a sense, 2024 was more volatile than 2023, even while the average level dropped. Interesting, one of the things I look at is, how often does the VIX close above 20? And the answer in 2024 was not a single day in the first half of the year, and 20 times in the second half of the year. So we went from, absolutely unconsciously sleepy and easy
complacent.
to, yep.
Okay.
Similarly, you had a streak of 200 VIX closes below 20 that ended with the August spike. So, again, we went from complacent to, on edge. With looking at the S&P, and again, volatility plus or minus 2% moves, which almost didn't happen in 2023. We had, I think, 3 of them, 2 or 3. And in 2024, there were 8, but 7 of the 8 were in the second half of the year. So again, a big jump in realized volatility in the second half of the year.
Interesting.
Again, and we can all remember this super long streak of VIX closes of SPX closes without a minus 2%. And that ended on August 5th.
Almost a whole year.
Yeah. And then we had another little bounce in that got shut down on Fed Day in December. So, we're starting over again. Same thing, realized vol, same story. Average went down, but the range expanded. This is looking at the term structure using SIBO's, 9-day to 1-year measures. August 5th was a monstrous outlier. If you look at where we were, the green dots are where we were to finish 2023, and the blue are where we finished 2024. So again, it's almost like that thing in August didn't happen, in terms of its impact on the full year.
Like COVID.
Right. Responsiveness, one of the things, that gets a lot of chatter is, the VIX is broken, blah, blah, blah.
Yeah.
I look at, how does the VIX respond to a change in the S&P, right? Because it's supposed to be inverse. We should see some regularity in the movement. What we saw, if the VIX is broken, maybe it's getting fixed again, because in 2024, that responsiveness picked up, in terms of average VIX change in points for every 1% SPX change. And there's a different way to look at it that is very dramatic. This is looking at that relationship, fixed point change to S&P, mapped out over time. And you can see that, in the first half of the year, it was relatively stable. And then in, August, it spiked. No surprise there. That move was way offsides. But it's remained elevated. And we'll, see something similar to that in another slide. But, again, this is when this relationship is elevated the way it was at the end of the year, it's a sign that, people are still on edge. August shook everybody up, and people are, continuing to be a little bit on edge. Okay. Using the VIX futures, kind of the same story. Wider range, lower average. In terms of backwardation, right, which I'm defining here as the front month being higher than the second month. We had 48 days of backwardation in 2024, but 46 of those 48 days came in the back half of the year. So again, the first half of the year would have looked almost exactly like 2023, which was the year of no fear, because the first 6 months were just an extension of 2023. Then the you know what hit the fan, and we started to look different. Some people know what volley is, some people don't. Volley is VIX, except that it uses at the money options only. And I think it's a valuable metric to use along with VIX. Same story, lower average, wider range for 2024. I think looking at the spread between VIX and volley is much more interesting. It's really a measure of skew, because if VIX is higher than volley, which it is most of the time, it represents how those out of the money options are affecting the value of VIX, because volley is just at the money. So I like to look at this spread. And one of the reasons I like to look at this spread is because, again, here is the first half of 2024 going into August. That spread, was in the 2 to 3 range, pretty stable. And then you had the August shock, and that spread has remained wide, which means that, in the aftermath of August, there's a lot more action in out of the money options that are reflected in VIX. So people are, essentially taking
protection.
directional. They're taking directional bets,
Directional. Okay.
away from the out of the money, away from the at the money action.
They're going out. They're looking for. They have to be looking for major moves if they're buying out the money calls and stuff. Like
exactly.
that.
Exactly.
Okay.
So there's clearly some group of folks who are saying things could get wiggy. We want some protection, out of the money.
Okay.
At the same time, and the same group, Nations Share, Scott Nations is a good friend of mine. They developed this taildex measure, which is, the sort of black swan. It's valuing put options that are 3 standard deviations out of the money. You can see the 2 spikes.
Yeah.
And end of the year, back at a level that reflects kind of, relative calm.
Oh, okay.
Relative calm. We're down in the 11-ish range. Again, it demonstrates vividly, the rapid recovery from those 2 events.
Yeah. So
let's not forget
violent. All right. I mean,
absolutely.
What that reminds me is that markets top with violence, and they bottom in silence. So I think there's been volatile swings. You're showing volatility in the VIX. That's very unusual. And we've had 2 heart attacks, Jim.
Right.
I believe in the number 3. So do you see a 3rd heart attack with what you're seeing now as potential in the first quarter?
My crystal ball, doesn't give me that granular a look. But, if we just think back on Trump 1.0 and the number of times we had episodes, having another episode coming out of the box, would not shock me. What's it going to be linked to? I don't know.
Well,
tariffs,
I heard, well, Mark Chandler told Blake that he has over 100 directives, executive orders to go and, become law or whatever they become on day 1.
Yeah. So,
it's a lot.
We could light it up next week.
Yeah. Okay. All right. Do you have more of your PowerPoint?
A little bit. Just a little bit. Bond markets. Bond markets.
Okay.
Let's not forget the bond markets.
No, let's not.
The MOVE index measures volatility for treasury bonds, in a similar fashion as the VIX does for equities. And, just look at a chart of TLT, and you see that bond market volatility has,
It's higher.
Is elevated and has just stayed elevated. Obviously, it's had its own sets of spikes, but I think that the bond market, treasury market, interest rates are a source of volatility that a lot of people should be paying attention to. Well, maybe they are, maybe they aren't. Because I
Could
think
you see
interest
the move
rates.
going to new highs? Because I see two drives here again. The two spikes, and that to me, technically, that's an incomplete pattern.
Yeah,
So we get another.
I think we can't be surprised if interest rates are a big driver of volatility over the next couple of years.
Okay.
Again, same story. Actually, not the widest range that we saw, and the average came down. And high yield spreads are showing no signs of stress. This is one that I watch carefully because historically the credit market has been a good
Leader.
canary in the coal mine of trouble brewing. So we'll be watching this one carefully as we go forward. And
Okay, let me that look. Can you go back to that one just for a second?
Yeah.
What would get you constructive closing back over 4?
I look at two things, and I only have the one chart. But if we get this thing, headed back across 4, that to me would smell trouble for equity markets. Because if the bond market, is repricing to that extent, historically, that's not good for equities. So that's, I'm watching it very carefully right now. And the only trick to this that people need to be aware of is that the high yield bond data that comes from the Fed is publicly traded bonds. And a lot of the credit market, as people probably have realized,
shadow banking
has gone to private credit.
Yeah.
So we also spend a lot of time talking to private credit managers about what they're seeing in deals getting done and portfolios being managed, and what kind of accruals, deferrals, picks. There are some indications in some private credit portfolios that credit quality may be deteriorating a little bit.
Okay, I mean, if you put an RSI under that, I bet you'd have glaring divergence at this new low here in the credit high yield spreads.
Well, I might have to take a look at that, Dale.
Yeah, take a look. Shoot it to me.
Anyway, that's the questions. What's Trump actually going to do? What's the Fed going to do? Geopolitics, Mag 7.
Yeah.
All
damage. Yeah.
And so people can follow me on X at Fixologist, and they can sign up for free at fixologist.substack.com, where I've been posting every day.
What's a minimum account that you guys accept over there to manage? I assume that's an RIA.
Yes, Ballast Rock Private Wealth is an RIA. We are a what we call a holistic wealth advisor. We work with people on financial planning, on estate planning, on investment management. And our clientele is high net worth. So our typical client,
accredited investors.
Yes, accredited investors are the primary target for what we do.
Okay, well, you're getting thank yous for going over this. Follow Jim at the minimum and sign up for his so you could keep in touch, because it's a different ball game starting next week, traders. And I think it's going to be, Jim, a great year for trading.
I wouldn't be surprised.
Go ahead.
Yeah, no, buy and hold. Look, it works for people who have patience and high risk tolerance. Certainly Trump 1.0 was a good environment for traders, and I suspect that Trump 2.0 will again be sunshine and happiness for the active trading
Jim,
community.
I think the days of just owning a spider, despite what the, long term says, you're always okay, the market comes back, and being able to relax while you're on the golf course,
right?
Those days are over, and that people are going to have to learn to be a little more tactical and have better risk management because the game is changing.
I wouldn't be surprised if that turns out to be the case. Historically, we do have these longish bull periods, punctuated by fairly dramatic
Yeah,
downturns. And we have a lot of people in the markets these days who, barely remember what the global financial crisis looked like and weren't around when we had the dot-com bubble burst. So, we have a lot of people who have not experienced those kinds of downturns. And if and when, well, I should say when we get another one, I think there will be, a lot of folks panicking.
Blaming their wealth manager.
Of course.
And one other thing, Jim, have you ever experienced this? Back in 2000, I had prospects come to me after the dot-com bubble pop, but they were still really had a lot of major gains. And they asked, what should you do? I said, well, why not just get out of the way? And they said, well, I'd pay too much in taxes on capital gains. Isn't that one of the worst reasons for being in or getting out of the market are tax implications?
Well, it is a challenge. It's often the case that a new client will come to me with a portfolio that was put together by somebody, perfectly well-meaning, and they got a bunch of stuff in it that I don't necessarily want to keep in the portfolio, but we have to manage through the reality that some of that stuff may have meaningful taxable gains in it. And so typically the process involves a transition over some time period, and looking for ways to harvest losses to offset gains that we might realize in repositioning the portfolio. It's challenging because
I bet you work hard to get paid. Everyone thinks it's easy, and it's not easy, especially dealing with people. So anyway, I know. Anyway, Jim, thank you so much for your presentation today. It was excellent and kind of gives us a feel for what 25 could look like either way. So appreciate you edifying our community, Jim, about the VIX.
Always.
All right. Jim
Thanks,
Carroll,
Coach.
everyone. Follow him on X at VIXologist. Now, do it now. Follow him now so that you're in touch with what's going on. Some real good content from Jim on X that you're going to want to see in your stream. So that's a wrap, everyone. Don't just count your pips, count your blessings, and see everyone tomorrow to wrap up the week. Good hunting the rest of the day. Thanks again, Jim, Carol, and we'll see everyone tomorrow. Adios.